Today we're diving into the ever-evolving world of vacation homes. Now, whether you're considering a serene escape or a savvy investment, understanding the latest market trends in the secondary home market is really, really crucial. So that's what I want to focus on today. I want to explore what 2024 has in store for potential secondary homes, vacation homes, for buyers and investors alike. So let's get into it. The secondary home market has been a hot topic in recent years, obviously with the surge in demand that defined the pandemic era. But as we step into 2024, the landscape is changing. And it already started to change over the past couple years. For example, pre-COVID, New York City was a primary residency market. South Florida was a secondary home market in the public eye, in the market's perception. Today, New York City is eventually, I believe, going to be a key secondary home market. You will have internationals and domestic purchasers alike wanting to own secondary homes in New York and declare tax residency in other marketplaces because they can work, live, and have access to great education as well as other amazing residential amenities in different marketplaces. Now that the intellectual conversations that happen day in and day out no longer necessarily have to happen in person. So it's something that we're seeing start to change, and it's affecting the way that Serene, as a real estate brokerage, thinks about marketing and selling secondary homes. How does that conversation change? Another example is places like Hilton Head and Raleigh, North Carolina. They're catching the eyes of savvy investors thanks to attractive cap rates and occupancy rates. Each of those locations offers unique advantages for those looking to get the most out of their investment. And take Orlando, Florida, for example. Orlando has a population that is expected to reach 5.2 million people by 2030. Orlando is one of the fastest growing metropolitan areas in the United States. It's one of the reasons I am so excited that we were able to open Serene Orlando this year. It's an incredible market. There's a vibrant economy, an ongoing infrastructure plan for improvements, which have drawn the eyes of investors looking to neighborhoods like Lake Nona and Winter Park, not just as secondary home markets, but also as primary residency. Now, additionally, there is a significant trend in adaptive reuse. So not just in commercial, which, for example, I'm sitting right now on the third floor of 372 West Broadway in New York City, which is our adaptive reuse of big box retail. This is a 4-floor retail building built for Tommy Hilfiger that now is a 4-floor clubhouse for all things Serene real estate, education, and media, amongst other things. That is adaptive reuse of, in our view in New York City, big box retail. What does that mean for residential real estate? Adaptive reuse, which involves repurposing old structures for new uses while preserving their historic elements, is becoming more and more and more popular. You're seeing this with local municipalities, local governments as well, as they start to get really, really involved now in what does adaptive reuse look like and how can we spur it even further. This is seen as environmentally beneficial. So we're big fans of that here. And it's gaining traction in states not just like New York, where you have a lot of landmark properties, but states like Connecticut, where we opened our Serene, Connecticut branch not that long ago. There's this type of investment which could be particularly advantageous due to new tax incentives and potential for increased property values. Nationally, we just have to look at the data, there is no better second home market right now than the Hamptons, where there has been a notable uptick in new signed contracts and listings Q1 2024 year over year. Specifically, new signed contracts increased by 40% year over year, with new listings growing by 55% compared to the previous year. So the difference in the Hamptons between 2023 and 2024 is material. But what's really influencing all of these trends? Hamptons, South Florida, North Carolina, all other historical secondary home markets. Experts are pointing to a mix of economic pressures, changing lifestyle preferences, which seem common sense to us. But as prices rise in urban centers, searching for better price levels and a change of scenery, that work-life balance is starting to affect the greater economy as a whole. And then we think about competition. It remains super fierce. House flippers, investors, institutional buyers, and primary home buyers are all in the mix, all at the same time, keeping the market dynamic and, yes, super competitive. New York City, for example, pre-COVID, saw about 30% of transactions done all cash. Whether a purchaser was refinancing with a technical refi after closing or not is not part of that number. So about 30% of our transactions being all cash felt like a big number. You know what that is today? Over 70%. And that's not institutional at all. That's investor, so retail purchasers, and primary residence and secondary residence buyers competing with everybody else. Interest rates remain historically high. When I say historically, I mean over the past 15 years, and that's pushing more cash into the real estate system. So let's talk about strategy. If you're eyeing a vacation home as an investment, a secondary home, I want you to consider the long term. Now, if you're a buyer watching this, I want you to pay close attention. And if you're an agent watching this, I want you to pay extra close attention because it's going to help you as you work with your clients. So when considering purchasing an investment property or a second home in the United States or everywhere, here are the top 3 universal factors potential buyers should keep in mind. Number 1, market dynamics. So buyers versus sellers markets. You need to understand whether the current market, and remember, real estate is bought and sold hyper locally, even though we feel like it's affected by a global media consumer confidence engine. But current markets are going to favor buyers or sellers at any given point in time. A buyer's market is characterized by more homes being available than buyers, leading to lower prices and more room for negotiation because absorption, so days on market, gets longer and longer. Conversely, in a seller's market, fewer homes are available relative to buyers, right? Leading to higher prices and faster sales, so absorption becomes tighter. Tracking sales trends is something that we spend a lot of time on at Serene. That's why our research team is so big. That's why our data is so incredible. Our market reports are so amazing. You can go and get them right now at serene.com. So tracking those trends, tracking inventory levels in your target location is going to give you insight into which market type you are entering. Because remember, if it's an investment property, secondary home, you don't make money on the sale, you make money on the buy. 2, rental demand and affordability. For investment purposes, particularly those aimed at generating rental income, it's important to assess the local rental demand and price to rent ratios, okay? Price to rent ratio. Areas with high rental demand, especially metropolitan regions or cities with significant job growth, so transient areas, are typically more promising for property investors. The price to rent ratio can help determine whether buying or renting is more economical in a given area, which will influence potential rental income returns, whether you're buying for investment or you're buying as a secondary home with the option to maybe rent out for the summer season, let's say. And the third thing that you want to focus on, if you are advising your client on buying a secondary home or investment property, or you are a buyer purchasing an investment property or a secondary home, is economic indicators and future growth projections. What do I mean by that? Economic stability and growth prospects in an area can significantly impact real estate values. So let's pause on that for a second. Look at a market like Bluffton, South Carolina, a market that we have a huge presence in. Before we entered Bluffton in 2023, what I looked at was number 3. And I looked at job growth. And I looked and I saw that in that market specifically, which can bleed out towards kind of the greater Hilton Head and then into the Savannah, Georgia marketplace, there is an expected job growth of nearly 1 million new jobs over the next 5 years. Find me another market with those statistics. I'll wait. That is price appreciation. That is secondary home market gold. So that's why number 3 I say for last, because I think it's the most important. So look for regions with positive economic forecasts, job growth, infrastructure development, which are likely to attract more residents and boost property values. And additionally, it's important to understand interest rate trends, right, and their impact on mortgage rates. This is less impactful in the Hamptons and far more impactful in Tampa. It's important to understand those movements, how mortgage rates can really help investors time their purchases to maximize investment return. Those are the 3 key things you need to pay attention to when either buying or advising on a secondary home purchase. I hope this was helpful for you. There's a lot going on in the real estate markets, but we are optimistic. I'd say a little bit cautiously optimistic, but spring is here, the sun is out, we feel great. If you are a real estate agent or you're looking for a great one, look nowhere else than serene.com. Thank you for watching.